In our base case, we don't expect this to actually be a default cycle that gets out of control in the onshore market. And in the offshore market, in the dollar market, obviously China is the biggest issuer. We again don't see any significant uptick in the default rate. And taking a step back, looking at the markets in general in Asia, January is going to be actually the biggest issuance in the credit markets. We'll see probably touching close to 60 billion of gross issuance compared to 40 billion last year. I think the markets are still pretty open. The financial conditions are easy, and we don't see any major issues here, even though some short-term pullback is possible.
Indeed, it is kind of the sweet spot, isn't it, where you get a relatively speaking high income with also fairly stable and improving macro fundamentals in the region. But let me just go back to China for a second here, Neeraj, because how do you think the government is going to manage what is a very difficult balancing act where they've got to try and reduce the moral hazard of implicit government guarantee for the SOEs at the same time as deleveraging the local SOEs, which is absolutely essential?
I think you have certainly touched on the key point here, which is deleveraging. So overall, our view is that the government will be able to balance this deleveraging cycle further. And in fact, this is something that started 5 years back in 2016 with the initial focus in the phase one of deleveraging, which was very much around the financial sector, reducing the financial sector risk. Now, the difference this time around is we see the focus moving towards the local SOEs, reducing the moral hazard of the implicit guarantee, and at the same time managing the default cycle. So overall, we do expect to see the defaults continuing and potentially going higher in 2021 relative to 2020. But given this is not a new focus, given obviously we've seen defaults continuing for the last 4 or 5 years, I don't expect to see any significant spike in the default cycle causing a financial condition tightening in the onshore market. So yes, keep an eye on it. Focus on it. I would argue, in fact, if anything, this will cause dislocations, providing good investment opportunities for long-term investors.
And what impact is shadow credit going to have in that sense, Neeraj, going forward? Because that a larger than expected decline in shadow credit did actually lead to a quite weak December credit report.
So in general, we've seen the peaking of the TSF in November. We do expect the TSF to drift lower, which also means that you will see some drift lower in the overall IP and other data, the growth momentum. But I don't think it's actually a major fall off the cliff scenario for the data in China. So data will remain okay. And to your point about the shadow financing, as that has been a focus for the last number of years, I expect shadow financing to play a smaller role going forward in terms of providing the credit to the system and more credit actually going to the more formal channels through the banking system or capital markets.